Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. As a reminder, you can find this episode on ETF Central amongst other educational episodes, all brought to you by the New York Stock Exchange. I'm joined by Sean O'Hara, friend of the New York Stock Exchange and president of Pacer ETFs. Sean, thank you for joining.
Doug, always good to be with you. Thank you so much, and thank you to the Exchange for all you do for us.
Sean, 2023 has been a very unique year, but for Pacer ETFs, it's just continuing the trend you're seeing year over year of unbelievable growth. Tell us what's going on your side of the woods.
Yeah, well, thanks for asking. We ended the year about $19.5 billion. We're just a hair under $27 billion at this point. So we've had a pretty good year in terms of net flows. Obviously, a little market help. Coming from lots of different places. So, the lineup is pretty versatile here, whether you're looking for income or accumulation or risk management, we have a story. So we feel pretty comfortable about, our year-end goal of $35 billion. So we think we can get there. It's going to take a lot of hard work, maybe a little help from the market, but we continue to sort of roll along, if you will.
Absolutely. And I remember the days of the launch of SRVR, server and INDS. Talk to me a little bit about those ETFs in particular. What was the original premise? Why did they originally launch?
Well, we had sort of had this idea that you should be pulling apart the real estate market and basically giving people sector opportunities like they have with traditional equities. And so we launched Server and INDS as the first two of those sector plays. And, we originally told the story differently than we do today. Server is the data centers and the cell phone towers, and INDS is that sort of mission critical infrastructure for e-commerce, supply chain, logistics, and that kind of stuff. And so we were sort of talking about it almost exclusively when we started as an e-commerce story. In other words, you order your product online, it goes to a cell phone tower, to a data center, back to somebody else's data center. The order gets sent out to a distribution center and it arrives at your front door. It's actually evolved over the years. Like Server is the mission critical infrastructure that powers everything in the digital revolution. So, AI is getting a lot of talk today, but, and obviously, the big thing about AI is it gobbles up huge amounts of data. And so we need more computing capacity. And that computing capacity is done largely in the cloud. And the cloud is basically just what a data center is. It's an offsite server farm, someplace that houses all of either your calculations or your data. And so, before AI, there was streaming and e-commerce and, the cloud is a big thing, 5G, autonomous vehicles. There was a lot of streaming and, Bitcoin, if you will, and so all those things, sort of were, using up a lot of data and computing power. With the advent of AI, we need even more. So we think it's a relevant story going forward. From a growth perspective, and if you're going to own real estate, you can own real estate that has a more reasonable chance perhaps of growing than, let's say, traditional office or bricks and mortar retail. The sister product, INDS, is essentially that mission critical real estate infrastructure that makes it possible for you to order something online and have it delivered that day or the next day at worst. And they look like they're simple buildings, but they're really not. Anybody who's driven up a major highway in the United States sees these buildings. They look like 4 slabs of concrete with a flat roof and a bunch of garage doors. But actually, there's a lot of technical expertise that goes into the construction of these. There's a lot of robotics and a lot of software that makes it possible for us to hit that button, that buy now button, if you will, and have that product be delivered to us. And then post-COVID, what we learned is we sort of had some supply chain issues. And so there's a secondary story to INDS beyond just the e-commerce real estate play, which is we need to build up that critical, supply chain infrastructure as well. So both these products have been out now 5 years or so, and I think they're doing fairly well versus their benchmarks. I think both of them are beating their benchmarks, which is, traditional broad-based real estate. And in today's market, it makes even more sense because, most people own some real estate in their portfolio. And I'm not sure you really want to own, office right now. Maybe it'll come back at some point, but there's like $1.5 trillion worth of commercial mortgages that are going to roll over the next year and a half. And those mortgages are going to roll over in buildings that are, half empty and at eye-popping numbers in terms of the rate they'll pay versus what they started at. So there's probably trouble in the real estate world in general, here's a way to sort of pivot to a different direction and buy into a real estate story on both sides, INDS and server, where there's a growth component to it.
Yeah, and I feel like, Sean, at Pacer ETFs, you're one of the first firms to sort of take the bucket of real estate and start to slice it and dice it in a number of different ways. You mentioned the AI story. You talk about the impact of technology now, commercial real estate. Are there large scale trends that you see? Are there things happening in the markets where you say the story of breaking real estate into these sectors makes a lot of sense as investors look towards the next few years?
I think so. I mean, I think you should be as specific about your real estate exposure as you are your equity exposure, right? And so, if all you had was a broad-based index, like, for example, the S&P 500 to invest in, that might not be the solution that a lot of people want to own. For example, this year, the Magnificent Seven stocks essentially have driven all the performance. That happens, but it never lasts. So if all you had was that, you'd have to ride it out, right? By looking at a different way to own real estate and be more specific or intentional about what you own, gives you, as the investor, the opportunity to be where you think the action is, as opposed to being, sort of in the soup of a broad-based real estate, publicly traded real estate ETF that, there are several of those out there. So you be more specific and buy what you want and be where you want. And they used to say location, location, location was the key to real estate, but I think it's, it's property type today. And data centers and cell phone towers are mission critical infrastructure for the technological revolution. And these big warehouses to mid-sized distribution centers to last mile delivery are the mission critical infrastructure that enable the supply chain and e-commerce.
So now, Sean, for someone who's listening in and they want to get to know you, your team, all the great things you're doing over at Pacer ETFs, where should they go?
PacerETFs.com.
Easy enough to remember. And of course, if you want to learn more about server, INDS, we've talked about both of those ETFs, or you just want to research the whole Pacer lineup, you can do it all at ETFcentral.com. Just go up into that search bar, type in server, type in INDS, you'll find a lot about it, or of course, go to Sean's website. All brought to you by none other than the New York Stock Exchange, the home of ETFs.